From the buyers and sellers that I've been talking to recently, if there's anything I know about the housing market right now, is that it's full of uncertainty, especially when it comes to home prices. Now, with everything happening in the economy overall, the big question is, will home prices keep rising this year, or could we actually see them decline? And on top of that, we've got mortgage rates. They've actually fallen for 6 weeks in a row now. And believe it or not, they're now actually lower than they were at this time last year. But will that trend continue? And what would it mean if it does for anyone considering buying or selling a home this year? I'm going to break down all the latest expert insights. I'm going to share what's happening both nationally with home prices and mortgage rates. And then I'm going to dive in and cover the latest trends here in the local Frisco real estate market. And even if you're not in Frisco, keep watching, as I'm going to show you exactly how to access the same insights for your local market. And as I wrap up, I'm going to share what all of this means for anyone planning on buying or selling a home in the months ahead. Now let's get started. Hi, this is Andrew with the Andrew Smith Team, eXp Realty here in Frisco, Texas. And as normal in my monthly market updates, I'm going to start by sharing some of the national trends that impact all of us. We're going to take a look at what home prices have been doing. I'm also going to share what the latest is on mortgage rates. And as I mentioned, they have been declining. Does that mean that they'll continue to do so? So we're going to get into all of that. And then we'll turn our attention to the local market here in Frisco. And as I mentioned, make sure you stay tuned because I'm going to let you know exactly how to track the trends in your local market and exactly which trends to track. So with that in mind, let me share my screen and go over what's going on with home prices. Now I'm going to start here with this quote from Selma Hepp, who's the chief economist at CoreLogic. And she just recently said home prices have mostly been moving sideways, starting in late summer through the end of 2024, a trend that may continue into the early months of 2025. And if you've seen any of the market reports that I've shared or done in recent months, you'll know this is exactly what I've been saying. It looked as though home prices last year were going to be relatively flat, and they were. And it has been looking as though that trend is going to continue in 2025. And that is exactly what Selma is saying here. Now, what we're looking at here is verification that real estate ultimately is local. So what I've got highlighted here is what happened, according to Case-Shiller, to home prices in 2024 in the 20 largest metros that they are tracking. And as you can see, it's a tale of two different markets. You've got places like Atlanta, here in Dallas, Denver, Detroit. All of those are right in the 1, 2, sometimes 3% range, Miami, Minneapolis. But take a look at Boston, Chicago, Cleveland, 5, 6% appreciation. New York, 7.22% appreciation. The only market that showed negative was Tampa, and it was down 1.11% year over year. And a lot of that had to do with the fact that they got hit with the hurricanes. The weather played a big part of that, so you suddenly had a rise in all of those properties, and it just didn't bode well for their local real estate market. But to put this in some perspective overall, this is what we're seeing. I mean, I talk about home prices normalizing, but what exactly does that mean? Take a look at this. And I know this might be hard to read. I have expanded it or zoomed in on it here a little bit. But over here on the far left side, this is going back to January 2000. And you can see the pace of appreciation that we were on all the way into May, June of 2020. Then look what happened. We all know what happened. Prices went on a tear. Look at the appreciation. Depending on market, it was over 20% a year. And as we know, it can't continue, right? That's where all the talk of the market's going to crash came from, was all of this. And then the pace of appreciation dropped off. This is the time we saw mortgage rates start to soar. Buyers pulled back completely. And we saw home prices plummet. and they actually went negative for a slight time year over year. But then starting in about July 2023, we started to see the markets recover a little bit. And this is how the markets have played out since then. So this is May of 24, this is July of 24, and this goes all the way through December. So you can see the pace of appreciation has slowed, and it's now sitting just over 2% on average as we look all the way around. But as I just showed you, that's going to vary depending upon your market. But we are into a pattern right where this is just holding steady. So it reiterates what Selma was saying, and it does tie into what I'm going to show you in just a minute with regards to the local Frisco market. Now, let's turn our attention to mortgage rates, because we all know that mortgage rates have been driving the housing market overall. As mortgage rates soared, buyer activity pulled back. Absolutely normal, because homes became very unaffordable. That also caused many people to assume that home prices were going to crash. Mortgage rates went up, buyers dropped, the imbalance would be there, prices would tumble. And it didn't happen. And the reason it didn't happen is because sellers pulled back as well. You've probably heard of the term mortgage rate lock, and it makes sense, doesn't it? If you currently own a home and you've got a rate around 3%, why on earth would you sell that home and move to a new one to pay a 7% mortgage? Unless you absolutely had to. Now, it's interesting. A recent survey was done by Lance Lambert at Reza Club. And what he found is that 54% of current homeowners would sell if mortgage rates got to 5.5%. Interesting number, 5.5%. That seems to be the magic rate that people are looking for. And although we're not there yet, I must say that's the reason prices didn't tumble, right? Because those sellers didn't sell. Now, we're not at 5.5%. It doesn't look as though we're going to get there soon. So this imbalance that we've had between supply and demand that's kept pricing steady, it looks as though it's going to stick around for a little bit. But here's what they're saying with regards to mortgage rates now. So this is from Jessica Lautz, and she's the Deputy Chief Economist and the VP of Research at the National Association of Realtors. And she said, this is the lowest rate for 30-year fixed rate mortgages in 2 months, marking 6 consecutive weeks of rate declines. It results in a monthly savings of $60 on a $400,000 home, which represents a 20% decrease from when rates peaked recently at 7.04. Now, is $60 a month a deal breaker for someone purchasing a home? Perhaps not. However, it could influence a buyer's financial perspective, shifting from the mid-6 range instead of 7%. Ultimately, vibes rather than data could prevail. So what exactly does she mean by that? And I think we all know it's a general sentiment, right? If rates are falling, it makes people start to feel better. It makes them feel that, okay, this isn't as bad as I thought. So it starts to make people feel a bit better about where they are. And you're starting to see some of that in the market right now. Now, if we look at mortgage rates so far this year, you can see here's where they peaked at 7.04%. That was in mid-January. And now they have continued falling all the way through the end of February. Now, the new home builders have jumped onto this quite aggressively, especially here in the local Frisco market. They are the ones that have been offering mortgage rate buy downs. They've been attacking things from a financing perspective rather than just a pricing perspective. And to give you an idea of that, there's several of the local builders now where they're offering an introductory rate of 4.49% in the first year, then they're fixing it at 5.49% in years 2 through 30. Now, I think that's interesting. Maybe they read the Lance Lambert report that showed that most sellers today, if they're planning on making a move, would make that move if rates were no higher than 5.5%. Now, I have to say, I haven't seen it move the needle much in terms of sellers here in the Frisco market just yet. And the reason I say that is if I look at all of the sellers that I'm dealing with currently, there's a common theme. It's either there's more of a need to sell, it's a job transfer, it's a divorce situation, it's an investment property that they no longer want. It's something along those lines, rather than people just saying, you know what, I'm out of space and it's time to move. I'm going to move up into a bigger house. That is definitely a smaller percentage than what we would normally see. Now, with that in mind, I'm going to turn my attention to the Frisco market and show you again what's happening here locally in this market. And again, I will share how you can get the exact same data for the market that is of interest to you. And as always, if you've got questions about any of this, I invite you to reach out. You can call or text the number that's on the screen. Alternatively, I've got a link to my calendar right here. I always offer a free 30-minute consultation call. More than happy to go through your own situation, your specific real estate requirements, and just share my honest opinion on what's going on in the market, discuss your situation, and give you the advice and information that you need to make the decision that is right for you and your family. All right, what we're looking at here is my Frisco weekly market report. And as mentioned, if you want to get the information specific to your local market, in the description below, I have got a link to this market report. If you follow that link, the minute you get to it, right here at the top, it says search any city or zip code. Go ahead and put the city or zip code that you're most interested in, hit enter, and you are going to get this exact same information for your local housing market. And you can sign up to receive it. It'll be emailed to you each and every week, so you've got the information specific to the market of your choosing, and you will know exactly what to watch. So on this market report, first thing is we talked about prices. I'm going to look at the median list price first. And as mentioned, I've zoomed in on this report here. I'm not going all the way back. I'm just going back 2 years. We're like March 23 to March 2025. And there's a couple of things to point out right here. If we go back to that Selma quote right at the beginning of this video, she talked about prices being pretty flat since last summer. And we've been talking about that. The dotted line or the dashed line here is the 7-day average, right? So it's a lot more volatile. It's just looking at what activities taken place in the last 7 days. The solid line that you see here, the solid line by comparison is the 90-day trend line. So if we look at this all the way through September of last year, flat, pretty flat, okay? And that is the trend that we're still seeing. If I look closely here on this dashed trend line, there hasn't been a lot of movement overall as we start the year. Now, by comparison, if we go back to the beginning of March, this is February 10th right here. So the end of February, March, look at the trend line. Look at where pricing goes as we enter into the busiest time of the year, the busy selling season, so to speak. It goes up quite dramatically, drops off. Then look at the appreciation curve in 24. It actually started in mid-January, went up pretty quick. But look at what we're doing in March this year, or in 2025 in general. That trend line is pretty flat overall. It's still trending up, which shows that we're not seeing prices go negative, but it's not going up at the pace it has gone up in the past. And I honestly expect that to continue. Now, the next one that we're going to look at here is inventory, because we all know that overall pricing is just a reflection between supply and demand. How many people are buying compared to how many people are selling. And there's been a lot of talk in the national media about how much inventory we have. And here in Frisco, yes, there's more inventory there's been in the past couple of years, but we're still not seeing the inventory levels we saw back in 2018, for instance. Now again, if you look over here on the far right side, you can see back at the beginning of January, there were 496 homes on the 7-day average. Right now there's 507. So pretty flat. We're not seeing major jumps in inventory. We did see it tick up In the past 7 days, I've seen more for sale signs in my neighborhood and in the market here overall, but in general, you aren't seeing a massive run up in inventory overall. Now, the last one we're going to look at, and this is something that many people do not follow, but it's a really important data point, and it is the number of properties with a price decrease. Now, what exactly does that mean? If you're a seller and you have to sell, and you've been sitting on the market for a little while, and you have not sold, then what do? You cut your list price. That's commonly what happens. You start cutting your list price. Right here, you can see that the percentage of homes taking a price reduction before going under contract is falling. Why is that important? If you've got less sellers having to reduce their price before their property goes under contract, that's an indication of buyer demand in the market. There's more demand in the market, more buyer activity, which is indicating that prices do not need to be cut. When you couple all of that with everything else that's going on, it is showing that there is some strength in the market. And that is something for whichever market you want to look up, you should really pay attention to. If you've got increasing inventory and the number of properties taking a price decrease before going under contract is increasing, that's showing a lot of weakness in the marketplace overall. Now, what does all of this mean if you're considering buying or selling a home in the months ahead? So if we look at the buyer activity first, one thing that just came out this morning is for the first time in quite a while, mortgage applications are up. They actually jumped quite a bit. That is a sign that more buyers are interested in purchasing. There's more buyers taking the steps necessary in order to be able to purchase. So if you are considering buying, that's not a bad idea. I'm not going to tell you that now is the time you absolutely have to jump in. All I'm letting you know at this point in time is that there are more buyers looking to enter the market. As I just showed, even though there's more homes for sale, the number of homes for sale is not growing astronomically by any means, and prices are still trending up. If mortgage rates continue to decline, and all indications are that they will, then you are likely to see more and more buyers keep jumping into the market. That's going to increase competition amongst buyers, and it's probably going to force the pace of appreciation up just a little bit. I'm not talking runaway, but it is going to push it up a little bit in the months ahead. Now, if you're planning on selling, okay, there are more sellers coming to market. There seems to be a lot of people out there that have put their plans on hold the past 2 and 3 years that have said, we're moving. I'm seeing it in my own neighborhood. I'm seeing it across town in general. Again, it's not massive amounts of homes coming to market, but we're definitely seeing more sellers selling than we have done in recent years. And I'll tell you right now, it's still a matter of the absolute homes in the best condition. So the best homes that are offer the best value for a buyer are the ones going under contract first and are the ones that are selling. Now, if you've been considering that and you want to know what steps you can take to put your home in that category of the best value in the best condition that show the best, then I invite you to reach out. Go ahead and call or text that number on your screen, or go ahead and scan the QR code. And let's go ahead and get something on the calendar to talk about your specific situation. Also, as a seller, take note of what the builders are doing. They're attacking the incentive from a financing perspective. That doesn't mean that you as a resale seller cannot do the same thing. And in many cases, it is actually a smart strategy, and it is cheaper than lowering your list price if you're in that position. So even if you've been on the market for a while and your home isn't moving, rather than dropping your price, you might want to consider offering that financing incentive, offering to buy down the rate for the buyer, as that can make a bigger difference and will actually give you more traction than just a simple price reduction. So I hope this information has been helpful for you. And again, if you have any questions whatsoever about the market, about your specific situation, then I invite you to reach out. I'm more than happy to talk through everything with you. And again, provide you with the information that you need to make the best decision for you and your family. Now make sure you don't go anywhere, because I know you're going to enjoy this video coming up next.